Hello everyone, welcome to Book Circle Trader. I got a little late today, so let me just quickly share the screen. But in the meanwhile, we will wait for some people to join in. And I really want more people to join in today because, as I have mentioned yesterday, that prices may react to the opposite side, and that is what happened in Nifty. It moved up a little bit, and I just wanted to say that there is nothing to worry about, as I have mentioned in the last video as well. So just wait for a couple of more people to join in, and then we will start here. In the meanwhile, I'll just take some sips of my tea. Hope you all are well and taking the well decision trades. I'm sorry that I got late by 1 minute today. Okay. So in the meanwhile, if you have any questions, please just post them in the comment box. So there is one thing that I really wanted you guys to post in the comment box, and that is that if you are actually, getting some value from my videos, and if my videos are, kind of helping you in some way or the other in taking the well-informed decisions and helping you in your trades. So just let me know that. I think we'll wait for just for a few seconds more, and then we will start. I have just one small complaint with you all that although you all are showing love and affection to my channel, in form of views that I'm getting in, but there are very few people who are actually liking the video. So please like the video if you really getting some value, getting something from my videos, and if my videos are able to help you in some sense, please like the video. That would be really helpful. So what we do is we'll start with the analysis here. So if you remember, if you have seen the yesterday's video, I have mentioned that prices are approaching to this support zone here and the rising 20-period moving average, and that is gonna push the prices to the upside, because that's what we have seen in the historical patterns, that whenever the especially on the daily time frame, whenever prices have touched the or come near to the rising 20 MA, the bulls get little active there, and this is what we have seen. But if you see closely, if you watch this pattern or this candlestick which has formed today, you will realize that it has formed within the range of this red candle, meaning the high of this candle and the low of this candle has not breached this candle. So this is technically a inside candle which has formed yesterday, today. So in my opinion, we are still very much in the safer side if we have sold the call spread. As I have mentioned yesterday that I have sold the 18,400 and 18,600 calls. So if you have sold that call spread, or if you have buy the puts, we are still pretty much in safer zone as long as you have sold it or buy the puts for this expiry, because doesn't anything looks like to panic here. We are pretty much in the on the safer zone here. So let's quickly review the weekly chart. And as you can see, prices have come down to this weekly support level. Let me just change the color so that we don't get confused. Okay, so this is the minor support level and prices are near to this area. So that indicates that, the pullback is in the process and there is nothing to worry about. In the hourly time frame, prices have came down near to this support area, and because of this support area, we are observing a little bit of rally, and there are chances that when prices will hit this resistance level, prices will again resume its downtrend from here. So far there is nothing to really get concerned about if we are bearish in the markets, because still things are not looking on favorable to the bullish side. Let me just quickly see what is happening on the Bank Nifty. So again, a very range-bound day. Prices have opened and closed almost at its same level. On the weekly time frame, the momentum is getting slowed down here. We have observing the continuous 3 weeks in the upside movement, and now we are seeing kind of slowing momentum. It might pull back a little and then again move to the upside, but as of now there is a slow momentum and we should be very careful of that, especially if you have a bullish observation or a bullish kind of bias. On the hourly time frame, we can see that we have this kind of rejection in price levels here. Okay, and prices have kind of taken the support around these levels and they are moving back up. So, in my opinion, as and when they will either breach this level or reach here, we might see some more selling, because this is what the price action is telling us at the moment. Now, let me just quickly move to the Nifty futures chart. So as you can see that there is a little bit of rebound in the prices. There are bulls who have bought the market, but the open interest is kind of falling. So that suggests that this buying is not supported by a good volume and a good open interest. So what does that mean? That means that this buying in the market is mainly because of this support area. Let me just quickly change the color of this support area as well. So this is because of this rising 20 MA and this 20 in this support zone. Otherwise, there is nothing that really moving the prices to the upside. The PCR is telling us that we are around 0.6, so we are still below the 0.70 PCR. So again, a bearish scenario. If you just quickly look at what is happening on the option chain level, so there is a little bit of reduction in the open interest at 18,300 and 18,400, but this reduction in the open interest change is very low in a sense. that the current open interest is already above 1 CR at these levels, and at 18,500 it's 97 lakhs. So that suggests that open interest build-up in the call side is already, has already been, gained a momentum. And if we can see on the put side, yes. So today at 18,200 and 18,000, especially 18,200 is the left strike where open interest has built a lot. It's over 100%. And at 18,000, which is a round number, it has changed to 22%, which is around 85 lakhs. So some bit of open interest build up on the put side for the first time in last 2 weeks. And that's maybe because we have already seen that in the charts, prices have reached to the support level, and which is why there are some momentum, which is gaining because of this daily support zone and this rising 20 MA. But what I believe is that it is not going to stay for long, because we are already seeing the slowing momentum. The markets are kind of not in that sense very bullish. But one thing which is to be noted here, and that is VIX, which is 13 points. So it has fallen below 15 and it has now fallen below the 14 level. So quite strange that markets are not favoring the bulls, but VIX is falling continuously. So that creates a kind of confusion in the market, right? Because when VIX continuously moves down, that suggests that some kind of high bullish momentum is due, and which is gonna come in the market. But so far, the price action and the data side is telling us that markets are looking a little bit of weaker as compared to the bears. So there is absolutely a confusion which is creating or building up slowly in the market. So my suggestion would be that for this expiry, you need to be very careful, because there are two opposite forces which are building up. But I have sold the 18,400 and 600 call spread, because in my opinion, at least for this expiry, it looks a little difficult for the markets to move, or breach that level. So no, that's about it in this analysis. If you have any questions, you can always comment and post that question in the comment box. But the one thing that I've been continuously telling my viewers, that be extra careful at this point in time, because the VIX is continuously falling, whereas the markets are not looking very much favorable to the bulls. So, it might remain in the range, or it might breach the range. Nobody knows. Only price action will tell us. But if you buy the naked calls, or if you sell the put spreads, you need to be very careful at this point in time. So this is what I wanted to share, because this is something very important that I want my viewers, especially those people who are not very well versed with the market and those who cannot give a lot of time in the analysis. I want them to really understand that this is quite a difficult time. This is a very tricky time, as I should say. So be little careful and take your trades, keeping your stop losses, keeping your money management in time. Just don't buy the calls because they are cheap, or don't sell the put spread because you can afford that. So with that in mind, I hope you have got the message here. And if you have any questions, just ask it. So let's just wrap up the session here, and I catch you soon in the next video. Take care. Good night.